And so investors, you have to be ready for that. Now, the number one rule in a bear market is don't overinvest, meaning that the bigger the position you have in a bear market, the more emotional tug when it goes against you, right? So again, if you're investing more than you feel comfortable with, you need to be very careful about that, because the market will push you to your extremes, to the point where you almost throw in the towel or do throw in the towel. Yeah, so I think overall it's a negative, right? Anytime you have this potential geopolitical scenario, especially after Russia invaded Ukraine, it just opens a possibility that it could happen with Taiwan. It definitely puts people on the back burner. Now, the key is this market has been going up and down inversely to the US dollar. And we know that the more geo instability, the more upside on the dollar, right? More people hide in the US dollar for safety. And so that, again, just right there is a negative for equity markets, for crypto markets, for gold. Nicely enough, we have potentially seen a major reversal in the dollar today. So we might be seeing a short-term top there, which would be positive for risk assets. Essentially, is the Fed is trying to lead this push, and they're talking so aggressively hawkish. Now, I believe it's a lot of talk. I'm curious, once we tick into recession, how quickly they back off from this hawkish talk. But I think they're trying to talk a tough game to make sure that inflation kind of stalls out here and does come in. But I do think raising rates sucks money out of the system, right? So just like printing and lowering rates drives money into the system, it makes money free or at least cheap. The opposite is occurring. So it's a supply-demand economics problem, where when you take dollars out of the system, inevitably the dollar should strengthen. And especially since we're acting more aggressively than the ECB or the Japanese central bank, it's going to strengthen the dollar against those currencies. So let's take a look at this. Take a look at this channel. So this, again, beautiful trend line from this high going back to 2022, early 2022 here, and look at the yen, what it just did today and how it's reversing. So these are the things that as a technician, I kind of watch for. And this, by the way, this doesn't mean that the yen is all of a sudden going to be strong and just continue to rally against the dollar. But what it tells me is, in the short term, the dollar may be topping out and due for a pullback. So again, if you're looking over the next couple of weeks, I would expect further dollar weakness, and then this chart should come in and pull back, maybe down to this lower level. We'll have to watch and see. But those are just some cool stuff I love looking at. Yeah, so the Euro chart is an interesting one. And again, it's a little bit on the harder side to figure out in terms of the highs. I'm looking at this relatively fresh, but this would be something that I would pay attention to. You have this angle where you were chopping along this trend line here, and it looks like we're kissing the low end of that after a very big move to the downside. You can see we had small bounces on the euro here, but for the most part, versus the dollar, the dollar's just been dominating the euro. And again, what's interesting here is this down move is coinciding with this potential bounce in the euro against the dollar is potentially coinciding with natural gas prices starting to fall. This is another really interesting thing. We know that Russia shut off that pipeline to Europe. Everyone was panicking over the weekend. And then what you saw is natural gas started to fall even in spite of that news. And one of the things I look at, and we can go to the natural gas chart here, one of the things I follow very closely as a trader is that when you have bullish news and an asset falls, or if you have bearish news and an asset rises, that does get my attention. It's telling you something as inner workings is going against the common kind of thought process. Well, let me show my chart. So a couple levels that I would pinpoint as resistance if the euro starts to bounce. This one would be one of them. You can see these pivot lows right through here, and then just above that. So I think you could get a bounce on the euro, but it probably would run into major resistance around 105 to 106 on the euro against the dollar. I think into year end or early 2023, your downside target on the spiders, for instance, you're looking at that pre-COVID high. So this is kind of my target. You're looking at like 338-ish or so. But I do think before all is said and done, meaning that whether it's 2023 or 2024, this market will go below there and go quite a bit lower. And I would not be surprised if we find ourselves retesting something down in this range quite a bit lower. Like, you could be looking and saying, hey, markets are net down from their all-time highs, well over 50%. from the highs put in when stimulus was at its max, when the government was sending checks, and when money was essentially free. So I think there's a reckoning here that's going to come to the markets. And again, as long as inflation stays above 2%, ask yourself, how does the economy get itself out of recession once it gets in? And what if it gets bad? And that's going to be a real kicker, right? If we get into a bad recession, unemployment starts spiking to 5, 6, 7%, but inflation is still 4%, let's say. What ends up happening then? How do we handle it as an economy? And I think that's going to be all out panic in the markets when that happens. And let's not forget that the chart itself of gold is still very, very bullish. It is holding its channel. It's had its big move up from 2018 to 2020. Here it's consolidating. It's holding this low. And again, to me, it's saying that at some point, this is going to start to make that next move up and likely break out to the upside. So I think for the most part, metals are the safest place to be. They've been performing well. Silver, you have that aspect of economic, kind of the industrial side, but I still think silver's at a great level. In fact, I got to show you this silver chart because I just love charts like this. Let me bring that up now here. But look at this silver chart. So here's your flag pattern, which is a perfect parallel line with these tops and these bottoms. And then look at this secondary trend line from here to here to here and right through, and look at what price did. So I think you might even have a bottom in silver here, a major bottom in silver. Doesn't necessarily mean it's going to rip to the upside right away, but a tradable bottom on silver with major technical support. So I'm a big fan of gold and silver here, and I continue to be. So on gold, the more a line hits, the weaker it can become. So you want to be aware of that. But again, let's take a look at the GOLD gold chart here. But again, as of now, it's holding. And again, you'd prefer it not to break this 1685 level in dollars, right? So I think that's one of the things that I'm watching for very closely. Can it hold that? Now, if it does, you have downside to about 1550 on the chart. But right now it's holding support. We're going to give it the benefit of the doubt. If the dollar really rips up, like let's say China did invade Taiwan, well, absolutely, you would see the dollar rip higher. Now, people would rotate into gold, which would offset some of the dip because of the strong dollar, but it might break, in the near term on that. We saw that during COVID, actually, where in the beginning of COVID, gold sold off with the equity markets because everyone was in full out panic. But for the most part, yeah, I think this is a good sideways choppy consolidation. It's bullish. Silver, interestingly enough, notice how this consolidation on gold is sideways, but the silver one is actually downsloping. If you want to understand the reasoning, like why isn't silver a sideways channel as well? The answer would be found in the industrial side. So remember, silver is going to trend a little bit lower when people are expecting a recession. And I think that's why you have this kind of slightly downsloping channel on silver versus gold's right angle. So one of the first things to note here is that Bitcoin for the last 10 days prior to yesterday was basically trading sideways, and that was while the dollar was going up, which is very unusual. But the dollar spiking yesterday in the overnight last night, it was finally kind of the straw that broke the camel's back, and finally it broke that 19.5 level, which is the 2017 high. So if I zoom out here, you can see that's this previous cycle high back in 2017. So once that happened, there were a bunch of stops that got run, and it kind of pushed Bitcoin even lower. Today, we're seeing the dollar pull back, so it's bouncing, but it's a tough scenario for Bitcoin here, and I do think it's going to ultimately go lower. Doesn't mean if the dollar pulls back a little bit more, it won't have a small bounce, but I'm hard-pressed to find a scenario where Bitcoin doesn't at least go to 12 to 13,000 before putting in a bottom, and I have a worst-case scenario that's well below 10,000 on Bitcoin. So I think it's important for Bitcoin investors to realize that this is the first bear cycle that the Fed is not printing money during, right? And so you have to take that into account when you're doing your cycle. So if previous cycles saw an 80 to 85% correction, you got to think this one would at least do 80 to 85%, which would be 12, 13,000, and it might even do more. And so investors, you have to be ready for that. Now, the number one rule in a bear market is don't overinvest, meaning that the bigger the position you have in a bear market, the more emotional tug when it goes against you, right? So again, if you're investing more than you feel comfortable with, You need to be very careful about that because the market will push you to your extremes to the point where you almost throw in the towel or do throw in the towel. So my policy is, start small. You can always add if it goes a little bit lower. If it just goes straight up, then it was a great trade and you say thank you very much, but always err on the side of caution. And then you have to start controlling that emotion. Start paying attention to the psychology of the markets. Like, if you watch Twitter and you see something where everyone is so bullish on it, you need to create a situation in your mind where you start to say, wait a minute, let me step back. Too many people are bullish. Maybe I shouldn't jump in here. And again, look at Bitcoin. Look at the hype on Bitcoin. Look at the hype on oil when it went to 130 when Russia invaded and everyone was calling for $200 a barrel. The same things repeat over and over again in charts and in markets. And if you can just learn to not be influenced emotionally by them, you get put in such a great opportunity position.